Welcome to the weekly market wrap-up. Here's what happened in the markets this week. Well, the main markets turned in an up and down performance as this week most investors fretted about the timing and pace of interest rate hikes from the Federal Reserve. And Apple unveiled some highly anticipated new products which affected the markets. How did the market settle out? Let's find out. The main benchmarks on Wall Street were mixed on Thursday as there was an unexpected increase in weekly jobless claims and falling commodity prices encouraged investors to remain cautious. The Dow Jones Industrial gave back 19.71 points to close at 17,049. The S&P 500 inched ahead a meager 1.76 points to close at 1,997, and the Nasdaq recovered 5.29 points to close Thursday at 4,591. Now let's turn to Canadian markets. Positive corporate earnings and deal making in the tech sector helped give the Toronto stock market a strong advance on Thursday. The Toronto Stock Exchange climbed 62.43 points to close at 15,534, and the TSX Venture Exchange continued its up and down week, slipping 1.72 points to close Thursday at 982. Apple share prices took a roller coaster ride Tuesday during the launch of the iPhone 6, with the announcement of the widely anticipated Apple Watch delivering a killer blow. Bizarrely, after the world had spent months waiting for it, the announcement of the iPhone 6 and iPhone 6 Sur Plus sent Apple's share prices spiraling down, before they shot back up at the announcement of Apple Pay, the company's new mobile payment system. But the crazy stock prices didn't stop there, as share prices sank back down after the announcement of the Apple Watch, which CEO Tim Cook called the most personal device we've ever created. Maybe some customers and stock market traders thought the kings of Silicon Valley were going down the style over substance route, as share prices continue to plummet following U2's performance. McDonald's, the world's largest fast food restaurant chain, posted its worst performance in over 10 years this week. The burger giant reported a 3.7% drop in global sales for August, which led to a 1.5% slide in share value. The company also warned that problems with a supplier in China will hurt third-quarter results. Now to the winner and the loser in our picks for the week. The winner for this week is Lululemon Athletica, ticker symbol LULU. Shares in the popular athletic wear company shot up almost 14% on Thursday after the retailer reported better than expected earnings and increased its guidance slightly for the year. This is a marked turnaround after the company shares were shredded in June, dropping 60% on Q1 earnings. Lululemon designs, manufactures, and distributes athletic apparel and accessories for healthy lifestyle activities such as yoga, running, and general fitness. And the loser for this week is Men's Wearhouse Inc., ticker symbol MW. Company shares fell as much as 6.68% on Thursday to close down 3% at $52.25 after the clothing retailer reported a 71% profit decline thanks to a $1.8 billion acquisition of rival company Joseph A. Bank Clothiers. The company reported profits of $12.3 million or 25 cents a share, down from $42.9 million or 85 cents a share. The Men's Wearhouse is a specialty retailer of men's suits and a provider of tuxedo rental product in the United States and Canada. It operates in two segments, retail and corporate apparel. Well, those are our winners and losers for the week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. And that's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Tuesday is Adobe Systems Incorporated with an EPS forecast of 13 cents compared to 21 cents in the prior year quarter. Next up on Wednesday is FedEx Corp with an EPS estimate of $1.94 compared to $1.53 in the prior year quarter. Lately, FedEx has thrown in its lot with Orbis, a leading global NGO that works to eliminate avoidable blindness. FedEx will help bring the Orbis Flying Eye Hospital back to Peru for a 2-week skills exchange program. And finally, on Thursday is Conagra Foods Inc. with an EPS estimate of 35 cents compared to 37 cents in the prior year quarter. And here are 3 Canadian stocks to watch next week. First up on Monday is Cordero Resource Corp with an EPS forecast for a break-even compared to a loss of 14 cents in the prior year quarter. Cordero's stock hit a 52-week low this week at only 6 cents. Next up on Tuesday is Reskfer Logix Corp with an EPS forecast for a loss of 4 cents compared to a gain of 8 cents in the prior year quarter. Earlier this month, the company announced tests surrounding its flagship product, RVX208, which it said led to a 77% relative risk reduction of major adverse cardiovascular events in patients with diabetes. Finally, on Thursday is Gluskin Chef & Associates Inc. with an EPS forecast of $1.06 compared to 46 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Royal Network News and BayStreet.ca, I'm Hannah Bernard.